Welcome to Within the Frame, where we bring today's most pressing issues across the globe into focus. I'm Kim Mok-yeon. The U.S. Federal Reserve cut its benchmark interest rate by a quarter percentage point on Wednesday, bringing it to a range of 4.25 to 4.5%. In a policy statement, the Fed said economic activity continues to expand solidly. It says labor market conditions have eased, while unemployment has risen slightly but still remains low. Now, regarding inflation, the Fed acknowledged progress towards its 2% target, but stated that inflation remains somewhat elevated. The Fed also indicated the possibility of 2 more rate cuts next year, a sharp revision from its previous forecast of 4. Now, as a result, the interest rate gap between the U.S. and South Korea have narrowed to 1.5 percentage points. So what does the latest rate hike signal, and how could it impact South Korea's economy? For more on this, we invite Kim Mok-yeon, professor at Seogang Business School. Welcome, Professor.
Good evening.
And we're also joined by Kim Mok-yeon, professor of banking and finance at Texas A&M University Mays Business School. Great to have you with us, Professor.
Thank you for the invite.
So let's first begin with Professor Mok-yeon. The U.S. Federal Open Market Committee decided to cut the policy interest rate by 0.25 percentage points. What is the background for this rate cut, Professor?
So this rate reduction was widely anticipated, with sources like the Fed Watch based on futures data of the Fed, and according to this, predicting about 95% probability of 25 basis point cut, which is correct. And Fed officials also echoed similar sentiments, signaling that the decision was largely expected by the market. And if we look back, the Fed increased the benchmark rate quite rapidly during 2022 to 2023. So the Federal Reserve felt burdened about the speed, and as long as inflation trend is going down, it was expected that the Fed would lower the rate fast. However, as you mentioned, inflation is still hovering above 2%, which is the target rate, and forecasts of the economic activities are stronger and somewhat persistent. So in that sense, the Fed projected that it would adopt a little more cautious approach to lower rates in the coming years than previously expected. I think that's viewed as bad news. Therefore, the stock market collapsed a bit. With this rate cut, obviously, it should be a relief to investors and borrowers. But given that the future directions are going to be much weaker, I think this is somewhat bad news this time.
Right, but we also mentioned about further cuts. Jerome Powell says the pace of rate cuts will slow down next year, and the number of rate cuts initially forecasted to be 4 will be reduced to 2. How would you read into this?
So this assessment is based on both Mr. Powell's statement and also the latest dot plot, which basically illustrates the distribution of opinions among the FOMC committee members regarding future rates. In September 2024, the median Fed funds forecast was about 3%, while the 3.9% actually. But then for the 2027, the longer term prediction for this time in December, projections actually indicate about 3.5%. So initially it was 3%, now actually moved up to 3.5%. So, and still it is tentative forecast, but clearly it shows that it's not going to go down further. And according to the this gap, it's going to be about twice of the movement instead of like 4. So clearly we have less room for this decrease in interest rate in 2025 and down the road about like 2027. And this basically is related to the uncertainty the Fed is now facing, because Fed now has to think about where to stop about like this rate reductions. Initially, it started from 2% all the way up to 5.75. And when it goes down, should it be 3% or it should be 4% or 3% or 2%? So initially, most of these economists can have some consensus that it's probably going to be somewhere around like 3%. But because of the uncertainty related to the new government regime, the trade also, and the capital depreciation changes because of this AI, the investment, some other things. So we don't know that well about like what would be the good neutral rate. And because of that, I think the Fed is now trying to be very cautious about where to stop.
Now, after this news, the South Korean currency has sharply weakened against the U.S. dollar on Thursday, briefly breaching the 1,451 mark for the first time since the 2009 global financial crisis. Professor Yongjin, what is your medium to long-term outlook for the exchange rate?
Well, Professor Hwa-kyun says it will be really tough to predict the future in this kind of situation. Yeah, as you mentioned, after the FOMC, Korean exchange rate went up over 1450, which looks very dangerous to Korean economy, right? But I think the exchange rate will stay around 1400 won per dollar due to the political instability we have now caused by the impeachment process, as well as the economic downturn in Korea and other countries where Korean countries export. However, in the long run, it will come back to 1,200 won per dollar due to the current amount, account surplus we have and foreign exchange reserves South Korea has. The cumulative current account surplus of South Korea from January to October 2024 is $74.2 billion. The foreign exchange reserve of South Korea as of November 2024 is $415.4 billion. That's huge. I'm very confident that if the current political turmoil be resolved well following the constitutional process, the exchange rate will come back to normal in the long run. Second half of 2025.
So it could come back to the normal range. But last weekend, reports have also said that the uncertainty in the capital markets is quite easing now following the passage of the impeachment motion against President Yoon Suk-yeol. Now, there are even forecasts suggesting that South Korea's benchmark Kospi could reach 2,600 points by the end of this year. What's your view on this?
Well, it was kind of surprising, right? Korean capital market was not that much volatile. It looks like a stabilized after passage of the impeachment motion against President Yoon Suk-yeol. It is performing better than what we worried. Right? From December 4 to December 17, the Kospi index fell 1.73%, while the Kosdaq index rose 0.53%, which is not significantly volatile, as we expected. The statement of the Financial Services Commission about injecting the Securities Market Stabilization Fund, if needed, also helps ease the concerns of market participants. However, I don't think that Kospi could reach 2,600 points by the end of the year. It is too much optimistic. There are two reasons. First of all, the political volatility does not end yet, which worries foreign investors. At the moment, foreign investors and individual investors sold off Korean stocks, while National Pension Service and similar pension funds are actively jumping in the situation to acquire the stocks sold by foreign and individual investors. From December 4 to December 17, individuals had sold $1.6 billion worth of stocks in the Kospi and Kosdaq market, while foreign investors had sold $1.1 billion. The foreign investors, has changed its stance to wait and see due to the martial law declaration and try to find alternative investment destinations like Taiwan and China. Secondly, corporate performance won't be good this quarter due to weak demand for semiconductor, automobile, and global economic downturn. Thirdly, the main cause of Korea discount has not been resolved yet. The corporate governance is not very clear enough to make investors feel safe to invest. Even further, the hawkish stand of Federal Reserve Board with regard to the future base interest cut may bring another level of uncertainty to Korean capital market.
Right, so the situation would ease, but 2,600 is too optimistic. All right.
Right.
Now, Professor Hwagin, many are expecting a rate cut at the Bank of Korea's monetary policy meeting in January. How might the current political situation, including the martial law crisis and the impeachment ongoing process, impact monetary policy decisions?
Right. So political uncertainty is widely acknowledged for its tendency to disrupt financial markets, according to many studies using international data. In particular, I think under the current circumstances, I think in many cases, monetary policy tends to implement some quantitative easing, which I think is already happening by purchasing repurchase agreements, etc. So I think the Bank of Korea is doing right things together with the other financial institute, the government agencies. While I think it remains a bit unclear whether inflation has fully subsided, given that economic forecast is also somewhat low, I think it is probably going to give a stronger case to lower the interest rate. In case of South Korea, however, some actions like this could lead to a significant currency devaluation of the won against the dollar, which is already somewhat soft. So this is somewhat a difficult choice or trade-off that the Bank of Korea actually is facing with. So given the political obscurity now that South Korea is experiencing, although it's probably going to subside within a month or something, it's probably essential to consider this factor carefully, meaning which one's more important? Is it the exchange rate that's going to affect the reputation of the South Korean economy and also the other economic, the variables, or it is going to be still inflation and economic forecast, and you have to give some just judgment about this. So one possibility is maybe you just change the interest rate a little less, actively, but like implement more expansionary fiscal policy, which this is of course the the Treasury's the task. Or maybe you can just actively lower the rate and then try to be calm with the with the fiscal side. So one or the other, I think careful considerations are necessary.
Mm-hmm. And could I ask, what do you think is more likely?
I think interest rate is going to definitely go down by probably 25 BP, and then also they're going to do both. I don't know if it's a good idea to both at this stage, but at this stage, probably just lowering the instability is important. So probably they'll do both.
All right. Thank you for your opinion.
I don't think the BOK will agree to that ideas because think about the current exchange market conditions.
Right.
If we
so.
Lower,
Right.
the volatility may increase dramatically.
All right,
Sure.
Gentlemen, thank you so much for both opinions on that front. Now let's shift gears. On the other hand, the current administration's real estate policy faces increasing concerns because it may lose momentum following Yoon's impeachment. Professor Young-jin, first, what is the current atmosphere in the real estate market?
Well, the real estate market has been frozen due to loan regulations with stress DSR being applied even before the martial law declaration and impeachment. And also bipolarization among the real estate market has been going on. The real estate price at Gangnam district in Seoul increased dramatically, but that of other areas fell down, except the first phase new town redevelopment leading district, that's the Longmain, including Bundang, Ilsan, Pyeongchon, Cheongdong, and Sanbon, which is like a capital area. Right? If uncertainty grows due to the state of emergency and impeachment circumstances, there might be delays in reconstruction schedules in the government announced plan for a sequential reorganization, what they want to do every year, which will lead to further drops in the real estate prices in the short term.
But compared to previous impeachment cases, there are predictions that recovering the real estate market may be a little bit more difficult this time around. How do you see this? And what do you think is the biggest influencing factor in the real estate market next year?
Right. The key difference between 2016 impeachment and the current one is the economic condition. In 2016, when the impeachment of the former President Park Geun-hye occurred, the economic situation was quite good. And the real estate price was not dropped, even though, the 3 months, around 3 months, the trade was kind of frozen. But the profit of major corporations in IT and communications were rising, and other economic activities like consumption and employment were solid. So from the day the impeachment bill was passed in the National Assembly, the Kospi index rose by 5.94% over the next 4 months. However, this time we are experiencing economic downturn. In particular, domestic consumption and employment are worsening. Moreover, household debt reached at the highest level, which puts lots of downward pressure on real estate price. In the long run, the delays in the reconstruction schedule may lead to lack of housing supply, which will put upward pressure on the real estate price.
Mm-hmm. So in line with this, the BOK has revised down its economic growth forecast for this year from 2.4 to 2.2, and for next year from 2.1 to 1.9%. Professor Hwa-kyun, what downward pressures do you expect to affect next year's growth?
Well, for the longer term trend going downward, I don't really know the Bank of Korea's economic model, but I know most of the models I think the central banks use. And probably, this downward trend in the long term has a lot to do with the lower fertility just rate, and also the lower the estimates about the total factor productivity, which has been consistently slowing down. So like that's actually why the BOK keeps arguing that we have to have some structural change and reform and things like that. But the going back to your question specifically, the next year one, I think why going down, I think is quite related to the economic ambiguity, especially related to the second term of the Trump administration. And also now, I think, although it was happening before, the estimate actually was given before, but I think given this, the political uncertainty now we're facing with in South Korea, that's also the added factor. So clearly, the most important part is this tariff policy, and then all this kind of ambiguities about whether these new administration is strengthening this protectionism about the trade and everything is going to affect the export market. That's basically the main thing. And then I think the added to that, I think, is going to be some other, the political risk and things like that can just push this, the growth rate further down.
Right. As you mentioned, the Trump administration is taking in office next month, and there are growing expectations that there will be significant changes to trade policies, like adjustments to the Inflation Reduction Act. Professor, then what kind of measures are necessary for South Korea?
I mean, this is more like the policy-making issue, so I think it's very important for the government, together with the firms being affected, I think, have to have like task team and then have to start negotiating right now. And I'm sure that we already have some experience with the first regime, and it's going to be even stronger in some sense, especially in the first, part of the second regime of this, the Trump administration. So clearly, it's very important to have good negotiation team in a consistent and persistent matter. I think, have to keep just knocking the door and just keep just, talking and discussing to get to the good conclusions. And of course, in terms of like hedging this type of the international risk is to push the, domestic, the demand. I think the domestic economy, the boosted, I think is going to be the best solution. So I know it's difficult, but I think it's something that I think the South Korean government can definitely do. So the firms, so I think the domestic side of the hedging is probably going to be something that the government has to really prioritize.
Right. And before we end our discussion, last question. The Federal Reserve Chair, Jerome Powell, said Wednesday local time that the U.S. Central Bank has no desire to be involved in any government effort to stockpile large amounts of Bitcoin, which was part of Trump's pledge. Professor Yong-jin, this comments by Powell caused Bitcoin prices to drop 5.7%, with other cryptos also losing value. How do you foresee the direction of the crypto market?
Well, that was kind of very disputable. I mean, as a government, they want to stockpile the Bitcoin, which is not yet proven as a instrumental way of doing, some managing, those kind of cryptocurrencies. But I always, have talked people to buy Bitcoin if they want to purchase cryptocurrency, because it has its own, merit compared to other types of coins or tokens. The supply of Bitcoin, I mean, the total number of coin issued is limited to 21 million, and it plays a role as key currency in the world of cryptocurrency. But a lot of people expected a Christmas rally, but I don't think that will be true. But the price of the Bitcoin went over $100,000 already. So there might be a cool down period till the end of this year. But next year we might see another rally for Bitcoin.
All right, so we'll have to wait and see how that goes. We'll leave our discussion right here. Many thanks again to Professor Young-jin and Professor Hwa-kyun for your insights tonight. We appreciate it.
Thanks for having me.
My pleasure.
And that'll be all from us on Within the Frame. Be sure to tune in next time as we continue to explore the stories that matter. Until then, stay informed and engaged.